At dawn on the U.S.-Mexico border, silence replaced what should have been the busiest hours of the day. Engines idle, crates of fresh tomatoes stacked high, workers waiting with nothing to move. What should have been an endless stream of produce rolling into American supermarkets was frozen in place. The shock came from Washington. The Trump administration had announced a 17% tariff on fresh Mexican tomatoes. That decision ignited a chain reaction that stretched from Texas to California, from Ottawa to Brussels, and from Sinaloa to European supermarket shelves. Nearly 70% of tomatoes consumed in the United States come from Mexico. That single fact explains why this was never just about tomatoes. It was about food security, trade power, and the unraveling of America's agricultural dominance. Canada wasted no time. The Canadian Food Inspection Agency issued a ruling that on paper looked routine, concerns about pesticide residues and quality standards. But behind that carefully written statement was something more deliberate. It was a reshaping of agricultural supply chains across North America. Within days, more than 200 truckloads of California-grown tomatoes were stopped at Canadian crossings. The Peace Bridge became a parking lot of stranded produce. Refrigeration units hummed as millions of dollars of fresh food slowly lost value. Those shipments represented $340 million in annual exports. They also represented school budgets, mortgage payments, and rural hospital funding. All of it suddenly severed. What made the blow worse was timing. Weeks before the ban, Canada had quietly signed $180 million in contracts with greenhouse growers in British Columbia and Ontario. Facilities were fully funded, fast-tracked, and designed to replace precisely what California had been supplying. The signal was clear. Canadian buyers no longer needed American farmers. For the families outside Fresno, who had grown tomatoes for generations, the message cut deep. As farmer Tom Richardson said, the problem wasn't quality. The problem was that Canada had already moved on. South of the border, Mexico saw its opening. Instead of waiting, it seized the chance to climb onto the world stage. With the help of $12 billion in European investment, Mexican agriculture expanded at unprecedented speed. More than $7 billion went directly into advanced greenhouses and hydroponic systems. These operations used 40% less water than traditional U.S. farms. $3 billion more strengthened roads, ports, and storage facilities. The rest built human capital, universities, training centers, and research hubs. Mexico wasn't just planting tomatoes, it was building the future of agriculture. The impact came fast. In less than 8 months, premium Mexican tomatoes were on European shelves, undercutting American prices by nearly 25%. European importers, already frustrated with American delays and inconsistencies, switched suppliers without hesitation. Maria Elena Vasquez, an agricultural economist in Guadalajara, described it as strategic brilliance. At the very moment American credibility was collapsing, Mexico positioned itself as the cheaper, more stable alternative. Back home, the ripple effects were brutal. In Watsonville, the tomato processing plant that once employed hundreds now sits idle. Trucking firms that used to haul produce to Canada have cut their fleets to a fraction. Fertilizer suppliers and equipment repair shops are shutting their doors. Even the diners where drivers once stopped for meals are going dark. Economists call this the multiplier effect. Every dollar lost at the farm gate means nearly 2 vanish from the local economy. Communities call it what it feels like: economic devastation. The statistics tell the story in cold numbers. Unemployment in farming counties has surged more than 30%. Property values have collapsed by nearly 20% in 6 months. Bankruptcy filings in tomato-producing regions are up 45%. Loan delinquencies have jumped 78%. Rural hospitals are scaling back. Schools are losing students and funding. Families that have stayed on the same land for generations are walking away. This collapse exposed more than a market dispute. It revealed how fragile America's agricultural foundation has become. Food is now treated as strategy, as national security, as leverage in global alliances. The European Union learned the hard way what dependence on Russian energy meant. When Mexico offered a reliable agricultural partner, Europe saw more than business. It saw security. And it moved quickly. Meanwhile, American agriculture fell further behind in technology. Mexico's greenhouses are lined with sensors, automated irrigation, and predictive software. Entire harvests can be planned with precision. Output is higher, water use is lower, and costs are slashed. American farms, stuck with outdated infrastructure and underfunded research, look increasingly dated. As Dr. Patricia Williams, once a California-based agricultural scientist, explained, "The breakthroughs exist, but U.S. bureaucracy blocks rapid adoption. In Mexico, the same breakthroughs are already transforming production. Distribution systems in America are also mismatched. Trucking fleets and rail lines were built for a time when global demand for U.S. produce seemed unshakable. Now, with falling exports, those oversized systems drive up per-unit costs, making American produce even less competitive. Supermarkets have already adapted. Shelves once filled with California tomatoes now display Mexican alternatives. Consumers don't see the politics. They see price and reliability. And right now, Mexico delivers both. Banks, once confident in farm loans, are pulling back. Collateral demands rise while families fall short. Crop insurance offers no relief because trade collapse isn't covered. Federal aid programs written for floods or droughts don't apply when the problem is disappearing markets. In Washington, congressional hearings drag on, filled with finger-pointing but no solutions. Every week, lost to bureaucratic delay allows competitors to tighten their hold. Mexico pushes through billion-dollar projects at record pace while the United States debates reports and studies. This is why the crisis is bigger than tomatoes. It sets a precedent. If the United States can lose ground this quickly in one crop, what happens when it's soybeans, wheat, or corn? These are staples that feed the world and sustain entire economies. The vulnerability is clear. Competitors see it. Investors act on it. Allies take note. All eyes are now on Washington, but time is running out. The next decisions will determine whether American farming stabilizes or enters a permanent decline. The longer the delay, the more leverage shifts abroad. The question is no longer whether U.S. agriculture is at risk. The question is how much of it can still be saved. We're watching what could be the first chapter of a new era in global food politics, and it started with a 17% tariff on tomatoes. If that decision can unleash this level of economic and geopolitical shock, imagine what happens when other sectors follow. The unraveling has begun. Where it stops depends on what choices are made in the coming weeks. Stay tuned. We'll track this story closely. If you want the latest updates on U.S.-Mexico trade, Canada's agricultural strategy, and the future of American farming, make sure you like this video, subscribe to the channel, and share your thoughts in the comments. The next 48 hours could decide how far this collapse spreads. Don't miss what comes next.